Hi everyone, just making a short video. Pictures are as good as 1,000 words, just so you can understand some of the language that I use and some of the phrases that I use in my analysis every day. These are some of the strongest indicators rather than the more difficult ones that I do with option and open interest analysis of where trading is being done and trading isn't being done. This sort of analysis you guys can do, guys and girls can do every evening, every morning, just to check where we are in any given cycle and whether it is still worth entering a trade. And if a trade has very high gamma, it's usually not worth entering. You're entering at the top of a trade. It's much better to enter at the bottom of a trade. It's also probably not good to enter a trade when you've got topping DPI. It's a time to consider taking your profits, especially if they're worth taking. I'm going to train up a few other people so we've got more eyes looking at the different charts during the day to make it a little bit easier, so it's less subjective and I make less errors, because the data is actually incredibly good. It's the subjectivity of the analysis rather than the brains that made the analysis to work. So anyway, here we're looking here at several different things. One of them is the brown line going across the top of the white section of the trading view chart, the simple trading view chart. That's DPI. DPI is an indicator that is made from end of the day data, which is sent to the Security Commissions Agency, FINRA. It's reported by market makers and dealers who do over-the-counter trades, OTC trades. Those over-the-counter trades are trades that are made at the centre of the spread, not at the bid or the ask, and they are made there so there isn't price discovery, so they are not affecting liquidity or making something more illiquid if there's a lot of buying. They are there usually for hedging, but originally they were put in place to lubricate the market, to make sure that it was easy for market makers to buy or sell within the market without affecting price, because market makers aren't trying to take the opposite side of your trade. They are trying to grease the cogs of the market so we have less volatility and there's always a market there. They also, obviously bigger trades, the retirement funds and people like that, when they come into a trade, if they were just to drop it on the market, they would affect price greatly. Anyway, Nasdaq's a good one to have a look at. Nasdaq, we can see here that we've got a high, a gamma high. These are the ceilings here, and they tend to sit in trend lines. That's a bull market that we can see there coming off the bottom of 2023, and then since then we've had a pretty stable market that's really gone across, and gamma, when it hits this top level here or just above it, is when we get to a topping part of the market. Just wanted to use the Nasdaq because it's an easy one to see the different types of markets that you're in, rather than ones that are just led by whatever's going on at the time. So if we were wanting to look at one that we can see, let's have a look. We'll go to this one here. So this is the Bitcoin miners. We just pull up the bits that we want. We want to see the gamma and we want to see the DPI. All right, and so that's all within chart settings. And down the bottom here, you can see the different tickers that make that up. There is other miners, but that's the majority of the miners, or the miners that have the biggest option trading in them. Here, the display ticker for this industry I have used is Riot. I suppose I could have picked WGMI, but it hadn't been around that long. I wanted something with a little bit more history. One of the things or the things that are very obvious in this chart is that it has a very different makeup of gamma to the last chart we were looking at. One of those things is that we get these trend lines where the peak of gamma is, and when they're banging their head against that ceiling, they won't go any higher without reloading. We have just had a reload, but we also had a whole lot of liquidity dropped into the market in Bitcoin with the new IBIT CBOE options, and to a smaller extent the grayscale options on their ETFs. Bitcoin markets haven't had any optionality really. There was a little bit of digital options, but very little options that were affecting the market and were affecting the way there was a top. Peaks were caused by other factors, more to do with the liquidity within the main markets. I see the Bitcoin market, the crypto markets, as an offshoot for volatility. And when we've got lots of liquidity or lots of money flowing around, they tend to rise. They're very similar to the SQQQ ETF. And they can tell you without you having to understand the underlying liquidity of the market, what's happening with the liquidity. So you can see the trend lines of the gamma there. This happens at OPEX time or just before OPEX time when we get these tops. And once they've hit those tops, they won't go any further. That is the peak. When you get to OPEX, you will rarely see a climb. You might see a flat period. After OPEX, you rarely see. We did see one in April this year where we went straight into the next climb. That is an unusual thing. In the main markets, we saw that. We didn't see that. This is the April section here. We didn't see it in the crypto markets necessarily. These were all OPEXs that this happened. Then the market makers can't make a market anymore because the gamma's too high. There's too much hedging taking place, so they have to reset the market. And so either they roll all the hedging forward, that changes the gamma and it allows the market to drop, and we might get a blow off like we saw this week. I did actually think there was enough gamma taken off for us to get a rising market, but I was wrong. And over the weekend, with some of the news coming in about who was going to be the Treasury Secretary, it's obviously turned the market around about what the market's thinking about what's going to happen now. We can see some other things in the market which are very associated with the gamma, and that's the DPI, that dark pool index. We can see 3 particular periods, not so much on this chart because we're too far away from it, but these periods are of accumulation, and then we get to a topping point which will relate directly to the point below it. Now, these periods of accumulation or high DPI tend to start with accumulation. We see accumulation here where we've got price going down and we've got gamma going down. Yet we've got rising DPI, that's accumulation. And then we find other times where it is rising in line with a rising price and rising gamma. And that tends to be just hedging. So the buying of the underlying for the hedging is done in the OTC markets. We also get small periods, which can't quite see in this here, where we have a little section here and a little section here where we get some actual distribution of the market. So there's some selling of the underlying. That can be related to the market makers don't need the hedging anymore, so they sell it, and the liquidity is provided by an even bigger market maker, probably Citadel or someone like that. They make bigger markets for people. I don't know where they go and offset their vol and their deltas, but they do somewhere. They're all bookkeepers and it's all insurance, so they spread it out over their insurance market. You'll often hear me talk about the miners being an overdone trade. There's too many traders within the market, and when you don't have people on the other side to buy a market, you don't get price discovery. The reason that I say that it's a trade that is overdone is just the amount of gamma, the amount of people in the trade, and that is causing this very high gamma that can't reach any further. You will find that there were miners, and there were definitely to do with Bitcoin. There were associate crypto products that were much more associated with the price of Bitcoin that rose easily within these markets. And the reason that they rose easily within these markets was because there just weren't many people trading them, and so they just didn't have the resistance. And so when we see one of these markets like this, we know that we're just going to have resistance, and we're not going to get the price discovery that we might have back here earlier in these runs, and even here early in the front, we've got much better price discovery because the gamma isn't killing it. It isn't it isn't a trade which has too many traders within it. So that's gamma ceilings and the makeup of why I say we've got topping DPI, topping tends to come down. There less actual buying or selling of the underlying needs to happen, purely because the price isn't moving a lot. So a lot of the hedging is done in very, very small amounts at the money, and we get smaller and smaller price discovery until we get to OPEX time, and then we might get some highly volatile stuff as the prices and the gamma is changed, the positioning and the OI has changed. If we then just had a quick look at here's Bitto, and I've used Bitto as it was the only tool that really related purely to Bitcoin, and it just hasn't had the same resistant problems because it just hasn't been traded anywhere near as much. So it's probably still not at a full gamma, but we're now starting to discover what that full gamma, that gamma ceiling is, and it's going to be up at this level here. We can see here that we've reached that gamma level. So if this week, you might have heard me say last week that we were coming to a gamma ceiling. That was our gamma ceiling. We can see these nice periods of we've got price going down, we've got gamma flat, but we've got accumulation. Here we've got price going up, gamma going up. We've got hedging. So this is just hedging within the underlying. And then on the odd occasion, we might see, it's probably hard to see here, but this is probably a little bit of distribution where we've got price dropping, gamma dropping, and DPI going up. Then the last one that I wanted to do was, again, we can use this one here, was just the opportunities that NDBI gives you. Really what it's doing is it's taking the hard work out of constantly working out, are we in a good gamma position? Is IV right? Is price discovery right? Have returns been right? Is it a good time, an opportune time to buy into the market? And so here, NDBI is giving us some great times recently to buy into the market, even if it was just for a short run. We can see we've had a good run here. These have given us maybe shorter runs. We did have some indication there was going to be a pullback there, but we were into a bull market, so it wasn't going to affect us so much. And the grain, we've had this great buy here just before the election on the 31st. The traders were in. It was a great time to buy. We had reasonably high DPI. We had good underlying price discovery, which had pulled back, and we had really good low IV in the calls. And we get a good buy signal coming through, and if you bought within that period, that was on the 31st, any time at the start of that week of the election, you would have done a 35% return. Again, these are really simple to use. They're simple to find. You don't need the difficulties of the day-to-day noise of the market. You can stand back and make some assumptions for yourself. It's great to be in trading rooms full of lively people who spot all of these opportunities and also know the best options and areas to trade to get the best returns, and also great timing of when to get out, which was again shown today by J-Roll, showing us that a great time to get out and roll away from Mara at the top of this latest section and go into GME, which looks like it's going to be happening. I picked AMC as the thing that looks like it's going to happen at the same time. And it's a little bit cheaper. Let's see what the effects are. Anyway, I hope that you've gained something from that. I'll do a breakdown on our liquidity indicator and how we've used the bid and the ask and price discovery to make a liquidity indicator, which is telling you what's happening within the market, and is an indicator that you can add to all of these other resources that we have to make us better traders. Anyway, have a good evening. I'll speak to you when I have finished the single stock returns analysis for the day. Thank you.